Live and recording.
This is Market Week Live, May 30th, 2025. Information and support for traders and investors. Welcome, everybody. We have a lot of people coming into the Zoom room here, and of course, a lot of people out there on YouTube watching this show. So, welcome, everybody. I think you're going to see some great information in here, something for sure that you're going to say, aha, I didn't think of that. Coming up in this show, we're going to have our Q&A round for level 1 to 4 members. And if you are watching this on YouTube and you're not a level 1 to 4 member or a free member, please do join level 1 to 4, and then you'll be able to participate in the Q&A here. The floor will be yours for our members that are in here now. The topics are our services, trade planning, chart analysis, trading issues. Trading issues is a big one for many people, but they don't often like to speak about them. So I'm welcoming those kind of questions. Matt is going to review our services, and then you'll see this level 4 special where you get to see everything and have everything that we do non-recurring. So you'll sign up, and then you'll only pay once, and then decide later if you want to stay on. I'm going to bring in some stock market analysis. We're going to take a special look at an unusual chart where we look at stocks versus interest rates. And then we're going to look at some of the evidence, probabilistic projections in price and time on the S&P 500, NASDAQ, and the Russell. And you're going to see our proprietary studies and our analytical process, which you're going to find illuminating. All right, if you're brand new, get acquainted, go to top of our website to the free stuff and sign up for SIR Lite. You're going to get free daily information on the S&P 500, and Matt does a fantastic job on that every single day. On YouTube, subscribe to this channel. That's at askSlim Team. Click the notification bell and like this video. Give it a thumbs up. And on X, follow me at askSlim. Any questions, again, write to Matt at askSlim.com. Everything that we do here, whether it be oral or written, whether it's video or any way that we present our information to you, is to be used with your personal decision makers, your financial professionals that you consult. And we always want you to refer to our disclaimers, full legal information at askSlim.com. And of course, looking at your own trading plan. And for our members, here's a little hint. Pretty soon, they're going to have a way for you to develop your trading plan right on our website. Here's the contact information, askSlim, team at askSlim.com, membership issues, and Matt at askSlim.com. If you want to ask about our content or anything on our info or educational analysis, of course, our first-time special and upgrades for our members. Right to Matt. Our host today, me, I've been at this as of May 20th is 51 years now as a trader. Started on the CBOE back in 1974. I'm still feeling young, and I should be with you for a little while more. And we have Matt Serpy that's been at this for a couple decades. Same thing for Arvi. And Arvi came over with me when I left Tasty Trade, and that was incredibly 10 years ago on May 23rd. So it's 10 years since I left Tasty Trade. And when Arvi wrote to me and he said, if you ever want to do this in your own business, I want to join up with you. And here we are. So, and then Katie, who has been a big follower of ours, and then passed all of our requirements to become a member here at askSlim.com of our amazing analytical team. You want to know about us? Go to askSlim.com, about askSlim, meet the team, and you'll be able to get lots of great fun stuff in there and the interviews that we did of each other. So go watch those. It's a lot of fun. All right, we're going to come into our Q&A. Again, this is for level 1 to 4 members. If you're not a level 1 to 4 member, become one now. And of course, you could use the special we have for level 4 right now. We're going to get into the Q&A right now, and I'm looking at here what they're asking for. I take the futures, and the rest of the team takes the stocks, the equities, and ETFs. And I see for me, there's a number of questions in here. And then the team has got a few in there also. So DJV wants me to look at silver and specifically the diamond that's in there, and I'm going to do that. And we have a look at like natural gas, gold, uh, and at CL. So the question in there in CL is about reference to trend changes of the contango, as in backwardation is almost at zero. That's going to be a tough one for me to comment on in changes in those skews. So we'll take a look at that. Also, we have a question coming in there from Simcha. Who did I say that right? Simcha, who wants to see the VIX. So I'll see if I'm going to add that in as we get over into the analysis. So thanks for that. And then the team, we have questions on SMH, Tesla, LHT, and Cody. I don't even know if we cover Cody. So we'll take a look at those also. So, all right, Matt, you lost me and now you got me back. I see that now. So, okay. I'm glad. All right, so let's get into the Q&A as I switch over now to looking at the charts. So when I do this, remember that I really want to look at all of our indicators and all the ways that we look at our analysis for the purpose of how that brings us to being able to make decisions about how we engage in the markets. That's really what we want to do, and that's the purpose of all of the different indicators that we bring in and all of the content that we've developed to help with that. So we're going to switch over here to the gold market is the first one we're going to look at. This one's very interesting. I'm going to start over here on the weekly and note over here gold. So we'll start out by looking at the trade setup conditions in here. And when you look at the intermediate, and that's what I'm on right now, and what we're looking at is our built-in algorithms, which tell us about the conditions, the momentum conditions. And when you're in a specific condition, you're likely to stay in that condition. Remember, it's inertia. Trading cycles, trading the markets is all about inertia. And inertia comes from as the force stays in that direction, and then when that force dissipates, there are signs of it. And then when the force reverses, then there are signs of that. And usually the signs come in the shorter time frames first. So this is the longer time frame, and this inertia is to the long side, as you can see. Now, if you look at our reversal scout in here, it's starting to just not move up as quickly, but that's not a very strong indication that the rally is about to end. What I do want to point out in here is that as you come into this period in June, right there, and we're entering into that, maybe into the first 2 to 3 weeks of June, is a likely corrective period. Now, why is that? That is because you can see in here the dominant force in this cycle right over here. And that usually when you get towards the end of it is when the buyers get a little tired. Some sellers start to come in. You can see these high waves that are right there or these long wicks. That's giving you some indication of that right over there. You also have a candlestick pattern that is a warning, which is this evening star that you see right there. So there are little signs in here that we're entering into the corrective process. If you look back at this one way back over here, and that is when the minor 1/3 cycle was coming down and the dominant cycle was coming down, you get into this correction. It was basically sideways, as you could see there, and it spent a good close to two and a half months or so in a corrective process right over there without giving a lot of ground. See, it fell, rallied, came down. That could be where we are, falling, rally, coming down in here. So I'm just speculating on that because everything we see here is very positive. So that's the first sign. That's the first thing I'm going to look at. We have strong conditions on the intermediate. Now I'm going to switch over to the short term, which we look at as the daily chart right over here. Now this is just super interesting when I look at this. So let's just take a look here at these two harmonic families that are in here, as you can see. Now notice the minor cycle in there is well lined up right in here with silver. So that's a great look right there. And these areas in here of corrections that you can see are the yellow zones. And there's one over here that I placed in there because there's one coming. If you look at the center of this, what we call the cycle low timing period right in here, that's around June 16th. So that's in alignment with what we just said here about the weekly. It's likely to have some period in here where it pulls down and maybe test this low over here near 3,100. But then after that, you can see we're going to get into this, which is a rising period there. And on the daily, the same thing. So that says when you get into this corrective process in here, that it's likely going to be a buyable event when you get down over there. But right now, it's important to see that you see this first cycle right over here, that made this low here and this low here. Now, if you line those up, we get what's called a VTL, a valid trend line. And it practically extends over to this one right over here. And that tells me that, well, if it were to get down below that level, you might get some accelerated selling. Right now, it's about, let's just say 32.10 or something like that. And here's your minor supports right in here. If it wanted to fall down and get down and test this low at 31 and a quarter or so, I think it would be setting up as a very good buy. But what's important to see in here is that this rising phase right there is not able to get through that resistance zone. So the energy that drove it up on this rising phase is not still there right now. And that's information to us. When you look at the short term, you can see it has turned neutral. So there's an alignment there on our market condition monitor with what I'm telling you right over here. So I'm giving you some deep analysis on this because I really want you to understand our process as we go through this. So now if I'm thinking about a trade, if I were going to be thinking about a trade, I might, say it's like 50-50. It could go up a little bit more, it could go down and get into that correction. But I don't really see a reason to put on anything significant when I look at that. I can get a little help if I go over to the near term, which is what we look at our intraday or 2-hour charts, and I'll go right over here. And you can see what's going on right here is that you have the slim ribbon PO executing a momentum signal. In other words, a downside resumption of momentum, and the reversal scout turning over, as you could see. So there is information on here that says to me, now if I want to think about executing a trade, I'm getting a little sense of leaning to the short side right over here, and that we may be entering into that corrective period. Remember that I see that the intermediate is powerfully bullish. The short term is neutral. So under those conditions where you're just edging to the bearish side on the shortest term, I'm not going to take a very big trade, though it's starting to lean towards looking at the short side for me when I look at that. So that's how I'm looking at all the information that's in here and using that. And it says to me, look a little bit to the short side in here, and full disclosure, even though I love gold and I'm a big holder of gold for the long term, I've got it put away. I have a little bit of a short side trade on right now, and it would only be small because of how this information is all setting up right now. So that's a look at the gold market, and I hope going into it in that kind of depth was valuable to you. And that's, love if you'd like to, write to team at askSlim.com and tell us if you like when we go into that deep kind of training analysis. And then we'll be able to get a sense for what we should illustrate on these shows or what we should bring to our members. So that's a look at the gold market. Let's switch over to silver. DJV, who is Danny, has asked me about SI and wants to know about that silver. Where's that right here? And here is silver. So let's just put up SLV right over here. And for those of you that get our market condition monitor level 3 and level 4, we have that programmed in with the ETFs in here. So if I look at the intermediate term, it is very bullish. If I look at the short term, it is still bullish. So remember, gold was neutral in the short term, so it is a little bit stronger looking at that. And I've noted that actually, that I think we're getting into a period where silver could outperform gold, and that silver gold ratio could start to come in. And in the near term, we are slightly bearish. So you can see that they are kind of similar right now. Let's take a look at silver because Danny really wants me to focus on this diamond that's in there. And you can see that's really a strong pattern, really a vivid pattern when you look at that. It looks like a big kite, is what it actually looks like. And when you get diamonds, they're very hard to figure out what they mean. If you look at this diamond way back over here, that was made up of two cycles, and that set up an important bottoming. It was part of a big consolidation, and diamonds are often consolidations. Diamonds often happen when you have some event in the middle of them. And you can see in here that this breakdown over here, which was in this like 1/3 cycle low right there, was really a false breakdown. And it was pushed down because of the tariff war that was happening. So now what we're looking at, of course, is the reversal scout turning up. And if I look here over at the daily chart, you can see in here that this is, looking pretty similar to gold, pretty well aligned with gold. And when I look at the intraday chart, well, that looks well aligned with gold right over there. So even though the internals are showing us a bit more strength in the silver market than gold, it's not really that significant. They look a lot alike. And that says to me that you could possibly get some period in here where this diamond stretches out or it gets down to the support in here. That's around 3250. This level down over here is around 3150. And you can see that we're looking in here that, there should have been another line in here. So I'm just going to bring that in here for you to see. We're really looking for that corrective process to play its way out. It might just broaden out this side of the diamond here. But because of the shape here and because of how high we are on the diamond, I'm going to guess that after this little corrective period, again, that comes out into June, that this is going to be a buy, and ultimately this diamond is going to prove to be a consolidation, and much higher prices are coming. I just looked today at some ads looking for buying some more silver rounds that have discounts on the premiums, because the premiums can be crazy on those. But that gives you an idea of what I'm thinking, that I just think that this period all the way over here from 2024 through we are in 2025, a whole year, if I look at it here on the weekly chart, I just think this is all a massive consolidation that is going to take the market much higher. So that's my guess. I'm really bullish on it. I'm looking for a modest correction in here, and that's how I look at that the silver market in there, Danny, and what I think about that diamond, specifically focusing on that. Again, we have intermediate very bullish, the short term as bullish, coming down from very bullish. That's that arrow right over there. And the near term showing us slightly bearish, that it's in this little corrective process right now and probably going to give us a buying opportunity coming forward. I say that because overall, the sum of the evidence to me is bullish. So I'm not telling you short it, even though I'm thinking that it's likely to go down. And what I want you to do is focus on the fact that even though there are down arrows over here, that's the end of this cycle. That doesn't mean sell. And a lot of people look at our work and say, hey, the cycle's coming down and the arrows are coming down. That means sell. It does not mean sell. It simply is giving a suggestion of the energetic waves that are in there. What you do with that information, whether it sets up a buy or gives you a sell, is much different than what those arrows are illustrating. So I really want to be clear on that right now. I'm a buyer. When I look at this, the buy time frame for me may be a few weeks away. So that's a look at silver. Let's take a look at natural gas /NG. And this really hasn't changed much since we looked at it before. We saw this move to the downside here that broke this low. It set up a pretty negative scenario. You could say, well, this also was the tariff war over here, and it could be a false breakdown. I have a hard time arguing that if somebody says that to me. However, when it comes up into the resistance and fails the way it is, it's really telling me that the conditions are not great in here. So when I look at that, it says to me, it hasn't really changed much. On the daily chart here, remember, we were talking about it coming up into this resistance sell zone the last time we looked at this. Now it got up past that level, so that means there's a possibility it's going to get up over there. But again, it's showing resistance right there and not wanting to go up very much. So this area here, about 374 up to about 388, looks to me like it's going to be a tough area for it to get through. And if it does get through, then we start looking at the next level up over here around 411. And if it gets through there, then things are changing. So right now, I'm going to say it does not look great looking at that. We have the reversal scout pointing to the downside here on the weekly. On the daily, you have a neutral condition, as you can see, and our slim ribbon PO has turned neutral, as you can see right there. But our option bias indicator is telling you stay on the short side in your option positions when you look at that. And you could see here on the intraday chart, and if I go to near term, oh, I don't have it on there, sorry. Then it would be slightly bearish. Guys, do we have a symbol for natural gas in here? I'm drawing a blank.
Might be UNG.
Oh, sorry. Yeah, thank you, Katie. Guys
Sure.
and girls, I
Yep.
meant. Okay, so we have UNG. Let's look at the intermediate is slightly bearish in there. The short term is very bearish, and the intermediate term, the near term, sorry, is very bearish. So you get that how this all aligns with what I'm telling you in there on natural gas. And I really want you to get in the habit of referring to how all of these things are setting up, how they are aligning, how the market condition monitor puts that together for you, and you can really get a sense for how to take our analysis and move it to the next step for you as you begin to engage with the markets in making your trading decisions. So it's about when does it become actionable, and at what size does it become actionable for you. Those are the important aspects of using the analysis very well. So that's a look at the natural gas market. We're going to take a look at light crude. And the question regarding a light crude was about the contango situation, or the fact that it's disappeared. Let me get the
Slim,
sorry,
that's Colgate.
that's Colgate. No wonder I'm having trouble there. Thank you.
Sure.
There we go. Okay. So what do we have? USO here? Yeah. Okay. So here's oil and USO. We'll take a look that it's slightly bullish here on the intermediate term. That's a bit of a conflict on the weekly from what we're seeing here, because it's just flattening out right there. So what that's coming from is the weightings that are coming from the weekly and daily chart. They're starting to turn bullish enough to give us a warning that the intermediate is going to turn bullish. And that makes sense because there's a cycle low that formed right in here, and that was pretty much on time for us. Now, if you look at the just a little longer term perspective in here, this is mind-boggling. This chart is so gorgeous, as it really shows you the movement in there cyclically and how that aligns up with the dominant cycle, the minor cycle right in here, and the intermediate, or the minor cycle that's in it. And the minor cycles are just beautiful, as you could see. And when two of them were lining up, then you made your bottom. Now it's bouncing in here, but remember, it's fighting against this big intermediate downside momentum that's in there. So that's why this is a sell zone between 65 and 68, let's say. And it's very likely to get up there and test it in light crude. Now, when the backwardation contango situation changes, that's really about short-term demand, short-term supply. So if the normal state is backwardation, whereas it's more expensive in the further out term, then if it flattens out, it means there's some short-term demand. Now, some people say if there's short-term demand, that would mean that it's a bullish situation, and it very well might be. I don't really see, I can't really look at that on the chart and say that really makes sense on the weekly chart, but does it make sense here on the daily chart? So the daily chart is interesting because you had the, breakdown in here and the test that occurred. And then the minor cycle is giving you this decline. Somebody wrote to me and said, isn't your light crude analysis bearish? Isn't it pointing to go down? Well, actually, it's not. What it's telling us is that this first minor cycle is forming in a way that has a positive configuration. In other words, it's very likely to bottom above where it began, way over here at 55.12, and then turn up in here. So you can see what this is essentially the arrows that are reflective of the sum of the evidence that says to us, well, it's likely to be able to make it up further up into this minor cycle. That's why they're pointing up past this level over here. And, right now it looks like 66 to 68 is an upside possibility. Though when we look on the weekly chart over here, I talked about 65 to 68, so it's a little bit different. But this is likely to make a bottom, and you see these lines. That's the minor cycle bottoming time period right in there, a cycle low time period. It's probably going to move up again into these areas when I look at that. And that's what I would say is a slightly positive condition based on the fact that this is a cycle that looks like it should complete on the minor cycle and try to move to the upside again. You can see in here that the intraday, and again, if I look at the near term, you can see the alignment that this is bearish. This actually turned bearish here on the slim ribbon PO back over here on 529 right there. So if you were an intraday trader or a near-term trader, that was good information. And now this resumption signal came on the downside, and you could see it's still going to the downside. Slim ribbon PO, reversal scout, all pointing negatively, and the market condition monitor over here pointing to the downside also. So all of this information that you can see in here is giving you mixed signals, as I see it, negative here on the momentum, but starting to get better, bottoming here on that minor cycle. Here you have a configuration that is suggesting positive right there. But, momentum is neutral, and on the near term, you have momentum negative. All of that says that this is a corrective period going on that's probably going to find one more little move to the upside in there, but not be able to get too far. I don't think I answered your question completely on the contango or backwardation situation, but you got an idea in general terms what that's about. All right, I'm going to turn this over to the team, and then they're going to look at some of the equities, and then we'll come back and we'll look at some other great stuff. So take over.
All right, let me share my screen. And you should be looking at a chart of a company called MongoDB. Can you see it?
Not quite yet. It still says it's okay. Yep, good.
Okay, great. So I believe this is a company in the technology infrastructure space. And what we've got here is a stock that's coming out of intermediate cycle timing. We have these cycle brackets on the bottom that represent average cycle lengths in this time frame. So let's see what we've got. That's 26 bars. We formed a trough right here the week of April 7th and starting to move up. However, we are negatively configured in the prior cycle, which means that it ended much lower than where it began. In
I
fact,
just
it
want to
made
hold
a
on one second. I want to make sure everybody's seeing your charts because I am not. I seem to be having an issue here. So,
okay, let me
does
know.
Matt, you
So
see?
I am seeing it. Matt, how about you?
Okay,
Yep.
good.
Yeah, I
Okay.
see it. It
All
must
right, good.
be
It's my issue
something
then.
with you.
Okay.
All
Okay.
right.
All right. So as I was saying, then this made a round trip from all the way back here in November of 2022. So we almost tagged that prior cycle low support from back there. We're getting a bounce now. We've got earnings coming up June 4th. This is not really impressing me to the upside. However, we do have a projection up here to the bottom of the resistance zone that would be around 228.34, which is the 38.2% retracement of the move from here, this prior cycle peak down to this recent low. So, but over on the daily chart, you can see that this is having some trouble taking off. We formed a cycle low right here. Now there is a bit of variability in these cycles, so could we be forming a slightly late cycle low? Sure. And if it wants to recover, then we are projecting maybe to the cycle peak. And if it were to be able to make these intermediate projections out here, then it would have to get up into this zone right here. But for now, this is not looking great. We do have negative momentum with the reversal scout. The slim ribbon is still green, so mixed momentum conditions here. If I was thinking about a trade, I would definitely wait to see how this action plays out. If we continue lower into the cycle, then I would consider that a breakdown as opposed to a late cycle low. The OBI is still suggesting that we should bias our options trades to the long side. So this one, it is showing positive momentum, but I would wait and see a little bit. Now we are going to look at Tesla. Tesla several weeks off an intermediate trough as well, and we are getting up towards the top of the resistance zone. These wicks are indicating that we are getting some selling, but we do have positive momentum. So this could continue higher. Let's look and see what we have over on the daily chart. So you can see that we are still inside this daily cycle timing window. This is the likely trough. We are getting some small retracement off of this move up, but we do have positive momentum here with both the reversal scout and the slim ribbon, so we are projecting higher. These are the levels from the weekly chart, and this next cycle is not due to trough until the middle of July. So this one looks okay. I would just wait for another signal on the slim ribbon PO. We're going to look at the semiconductor ETF. Okay, this one also is several, let me just change the time frame here so that this lines up better. There we go. We are several weeks off of this cycle trough as well, and we are right at that 78.6% fib of the move from the prior cycle high to that trough, and we're backing off from there. We are projecting that it could get higher, maybe up to this prior cycle peak or even the all-time high later in the cycle, but we do have this retracement going on, and we'll see in a moment what that looks like over on the daily chart. Positive momentum, having some trouble here at the 78.6% fib. We have got 3 weeks of trying to get through that area, but unable to do so. Over on the daily chart, we have a mixed momentum condition here. Our slim ribbon is still positive. Our reversal scout has turned green, has turned purple, showing negative momentum, and that makes sense. That often happens as we move into a daily cycle timing window when we expect the current daily cycle to form a trough and then to move back up into the rising phase of the next cycle. So if we were to do a retracement level from here, let's see, I think that one's a little bit higher. I would suspect that we could get down 231.90 to 26.55. That would be the top of a resistance zone right there. So that time period is from June 3rd to June 12th. So early to mid-June is when we would expect this retracement to be complete and then move back up. And then we had a couple of requests for long-term and weekly charts. So let's start with the long-term chart of Apple, which this is a monthly chart. So each bar represents 1 month. You can see that this has got sharply downward negative momentum on our reversal scout, and we are approaching the timing when we would expect this minor cycle to form a trough. So we got down below this long-term 78.6% fib. It bounced back up, did not hold that level, but this is still showing some weakness. So that makes sense when you look over here at the weekly chart. Notice this weakness. You had this weekly cycle trough form. We had to move up into the middle of the resistance zone. We still have positive momentum on the reversal scout in this time frame, but it's starting to flatten out, and we are this is showing weakness. That's why we have this projected this way and moving lower into this time period in the early fall. Over on the daily chart, you can see it even more clearly. Here's our cycle. We don't have a trough due until mid to late June, and this is showing negative momentum. Reversal scout negative, and the slim ribbon has turned negative as well. The slim ribbon PO can't even get up above this line to give us the signal. So there is quite a bit of weakness in here, and this cycle over here on the weekly chart should give us the trough of the monthly minor half cycle here. So after this next weekly cycle, we should be able to get a bounce and see how we do on that one. And the other one that we're going to look at is NVIDIA. So here we have a 22 bar cycle. We did have a break of that cycle low support, but it did not hold. However, based on that, I did add this alternate 25 bar cycle that we are investigating based on this possibility. However, it doesn't really change the analysis over the course of the next few months. We do have negative momentum in this time frame, but it is starting to curl up. So I have this projection possibly back up to the cycle high so far, maybe a little bit higher. And then we won't be able to investigate these cycles, this alternate cycle, until we see if we get a trough here out in the summer of 26, I believe it is. Yes, so we're going to have to wait about a year to see if this is the cycle that we should be following or this one. But it doesn't really change anything in the meantime. I would be cautiously bullish on this one in the long term. And on the intermediate term, here you can see we're all the way up to the 78.6% fib. After forming our trough, we have the upturn in momentum, getting a little pullback at that 78.6 now, but because of the early rising phase and the positive momentum, we are projecting higher up to this 153.13 area, which was that prior cycle high. Over on the daily chart, we are anticipating I would move this down now because we've just broken below that while we've been talking. So down to the top of the support zone here over the next couple of weeks as we form a trough, we do still have positive momentum. So this one looks more bullish. And that's all I've got.
Slim, it is all you, sir.
Oh, wow. Okay. Harvey, you got left out there.
Left out.
Sorry,
That's all
Arby.
right. That's all right.
All right. Well, we'll come back to me then. Thanks for that great work you did there, Katie.
Great job,
And
Katie.
yeah, really appreciate Harvey giving you all that space. All right, so that's going to wrap up our Q&A for the week. You could see that what a great way to really get good lessons on how to use our style of analysis, which of course I totally believe in, and I think a lot of people see that it is, while it is very complex, it's actually quite manual. And once you really get, your eyes tuned into it, you get just a great feel for the market. So again, if you want to learn a lot more about how we do this, I want you to listen to Matt right now. Matt, take over.
All right. Thanks, Slim. Great work. Katie, RV, you always do great on all the charts you've been producing.
Thanks, Matt.
Yeah. Okay. We should see the askSlim homepage here. For those of you that are new to askSlim, we provide several premium membership levels. And as Slim mentioned, we also offer some free stuff where there is a daily snapshot light version that I produce on a daily basis after the market closes, and then it's distributed in the morning to the free members, and after the market closes to our premium members, usually in the early afternoon. In terms of our membership levels, though, on our site, you can see under the technical analysis services that we offer several membership tiers, and those run from a level 1 to a level 4, and then we have a separate standalone day trader add-on service. So we support swing traders of all different stocks. As you go from one membership level to another, your coverage of the markets that we provide will increase. So in level 1, you get an immersive review of the major indexes. And then as you move into level 2, you're going to expand that out to all of our major markets. And also that will include our full focus list. So we have about 85 symbols that we cover on basically a daily, weekly basis, where you get our weekly and daily analysis. And then when you move into levels 3 and 4, that's where you get to access our tools and live indicators and live notification systems as well. And then in level 4, you get the full all-in service. And that one is what Slim and Katie and Arvi and myself, when we're doing our work on these charts, those are the same custom charts that you'll be able to access. Now, if you're a level 4 member, yes, you do need the thinkorswim platform if you do want to import those charts that you see us present. However, you don't have to trade with the thinkorswim platform. So they offer that platform essentially, I believe, for free. Now, there are some areas of the world that you can access it, but the most important thing is that you can utilize it without having to trade with Schwab. Not saying that you shouldn't, but that if you had that concern that you wanted to use your own brokerage, you can, and then you can use their tool, their charting software, to import our indicators and our charts. Okay, so that's a pretty good in-depth review of the different membership services. And as Slim mentioned, we have a special offer that's running right now that's on level 4, and it's for 1 month. You get 37% off. It's $99 instead of $159. So that's a significant value there. And with that, you're going to get access to all of our custom charts, all the indicators, everything that you saw us present today in terms of the structure of the way we look at the chart grids and the utilization of those indicators. And then in addition to that, and this is really important because as Slim was reviewing gold and reviewing silver, he was showing the market conditions monitor. I'm going to pull that over here for just a second. And what you'll notice is, obviously, as a analyst, you're preparing your work on the charts, and then you go into different modes of operation in terms of switching gears. So you go from analyst, and then you're going to go into a trade planning strategist hat, and then you move into trade execution, trade management, so on and so forth. And as you put a plan together, now Slim was mentioning that currently in this near-term condition that you have gold, which is bearish or slightly bearish, and there might be a smaller position size that you might consider putting on, because as you look at the more dominant conditions, those are more bullish. So here at askSlim, we are very directional in the way that our methodology generates the technical evidence. And so if you're following that type of style, then yes, having the smaller position sizing in those smaller time frames makes sense. Now, as things shift, as the gold market shifts back to a more bullish condition, what you can do with the market condition monitor is you can set up notifications for yourself. So I've created a slightly bullish and bullish notification. So as the momentum conditions, as our algorithm senses these shifts back to a more bullish condition, you could receive a notification on your desktop alerting you that the near-term condition is shifting. Now, why did I select near-term? Well, even if you're an intermediate or short-term trader, knowing that there's this shift happening in the near term is that first indication of that first domino in terms of the conditions moving towards that bullish. And then from an opposite perspective, let's say that we are looking at the indexes. And you can see today at around 8:34 a.m., the slim ribbon on the 15-minute went negative, and then at 10:45, the reversal scout on the 15-minute went negative. This was an indication, especially if you're a near-term trader, that something may have been changing, and if you're an intraday trader. So these are ways that you can use these tools where you can set up these notifications, receive those updates on your desktop when conditions are changing, whether you have a position on that you're looking to reduce or take off, or if you're looking to add to a position. This can be very helpful to be able to monitor that, and that's why we call it the Market Conditions Monitor. And the full notification system, where you have 200 subscriptions that you can create for yourself, are available with the level 4 membership. So you get that combination of the chart work that you can do on our grids, and then also sort of as a companion tool, you can use the Market Conditions Monitor to set yourself up with execution of your trading plan. So those are very, very powerful tools that you can combine. Comes with that level 4. Again, this is a level 4 special that is non-recurring. Obviously, as Slim mentioned, if you wanted to continue, we'll send you another special discount for a little bit longer, probably a quarterly membership opportunity. But if you chose that you didn't want to continue, there is no commitment. So it's a great opportunity to really dive into what we offer here. And level 4 is the tier where, as the top tier, you're going to get all of that information. I'm going to host a webinar early next week, either Monday or Tuesday, and I'll send out more information today to everyone who is at least a free subscriber. And I'll do a tour of level 4, and we'll talk through the trade planning process and how you can utilize these tools in real time to think through your process. All right, Slim, that's going to wrap up my segment, and I'll bring it back to you.
Okay, great presentation of that. And
All right.
I'm going to grab this back from you.
Sure.
Okay, thanks for the great presentation there, Matt. And
Welcome.
we're going to move to the stock market. So this is the feature that everybody seems to want to look at, and I'm going to expand on it a bit today, and you're going to really be excited by what you see. So let's take a look here first at this important slide, which says to you about our approach to the market and about you using our information and the important aspect of trade ownership. And we do have a video in our workshop about owning your own trades in our library, sorry, and you will be able to learn more about the importance of that. But I'll tell you right now, owning your own trades means managing your own risk, no matter what anybody is saying. That is one of the keys to long-term success as a trader. All right, so what's going on in the market this week? Well, stock market continues upward as news of the tariffs dominated. Indexes jumped massively on Memorial Day after the EU called President Trump to negotiate on tariffs. And then he pushed the date out to July 9th from June 1st as the time that he would not input those 50% tariffs on the EU. So negotiation is going on. S&P 500 jumped 100 points overnight on Wednesday, but then faded. And that was after the court blocked President Trump's tariff power. In other words, they're saying that what he was doing was not legal, and they blocked it. So everybody was excited about that. S&P's jumped 100 points and then faded and gave the whole thing up. On Friday, the S&P 500 was down 15 points early as a different court reinstated the president's ability to impose these tariffs. So it was down 15 points and then recovered, and then fell to down 20 points and recovered. But then, as this morning, President Trump said China is totally violating the deal, and then this afternoon he came out and blasted China, and that sent the stock market down, with the S&Ps down as much as 70 points as we're doing this show, and not being able to get much of a rebound right now. NVIDIA earnings came out Wednesday after the close. The stock was up 5% on a miss, but they did say that demand was strong for their products, so it went up despite that earnings miss. The FOMC came out and they warned that there's risk on both sides. Higher inflation is possible, weaker jobs are possible, and that puts them stuck and not in any position to do anything. Other earnings news that came out, which are really interesting, is that with the tariffs all over the place, affecting people, affecting the companies, a lot of companies came out and they're getting cratered because they're saying they missed on earnings. They don't know if they can talk about earnings in the future, and that's over tariffs. Of course, tariffs are a good cover for bad management. So I wonder about that, and the markets are punishing them based on that. A lot of companies are getting hit. And for the S&P 500 for the week, well, they've given up some of that gain right now. They're up about 1% now on the week. And for the S&P 500 now up about 4% on the month, and the Nasdaq up about 8% on the month. So it changed a little bit because they moved down about 1% since I have put these numbers on this slide. So that's really what happened during the week, setting up a stock market that is now possibly in a minor correction, and I'm going to talk about that. The first thing we're going to do is I'm going to share a very unusual chart with you. This chart I put together for my own analysis, and I'm having a little trouble coming to a conclusion. So I thought I'll put this out there for us to mull over and to see, you can write to team at askSlim.com if you've got some thoughts about what we're going to look at, or you could, put a comment up on the YouTube video and I'll see it there. So let's take a look at this extremely interesting and unusual chart of the stock market versus the interest rate market. So what are we looking at here? We're looking at a chart that looks at 25 years, the last 25 years on a monthly chart of the S&P 500, which is the candlestick chart that you see there. And that is versus the line chart, which are interest rates. And the green zones are positive correlations in rising markets. The red zones are positive correlations in falling markets. In other words, they go up together, they go down together. The yellow zones are inverse correlations on a monthly chart. Well, what does that tell you looking at this chart? It's almost all red and green. So that means that interest rates and the stock market move together most of the time. And that is very counterintuitive because a lot of people would say, okay, interest rates are going up, it's bad for the stock market. Well, that's not true. Interest rates go up because the economy is solid. You don't have a situation that you have to worry about earnings, and that's why they tend to move up together. Now, interest rates have their biggest declines when the stock market is declining. And you can see in here, as you look at the bear market here in 2002, 2000 to 2002, 2007 to 2009, both of those are time period where the stock market fell hard in those bear markets and interest rates went down. That's because money is moving out of the stock market and moving into the bond market. When a safety bid comes in, when people want to get out of their exposure to stocks and into something that's safer that they can get a return on, so they move into the bond market, and that happens. The biggest declines in interest rates come with the biggest declines in the stock market. It's very clear when you look at that here. Here's the Euro crisis right in here. We've had a couple of time periods where both of them fell together, as you could see. Here's the 2016 mini bear market. It was down about 16% on the Dow, 21% on the S&P 500. Here is the 2020 pandemic right over here, as you could see. And here is the trade war right over here, where they both moved down together. Interest rates go down, the stock market goes down. These periods where they were going in opposite directions are, to me, unexplainable. I mean, that's just what was happening. I can't really get a good sense for that right now. But look what happens in here. Now I'm going to take a closer look so you can see. In this period right in here, we lost our triangle, so I'm going to go back. In that period right in there, the triangle shows you that we are in an 18-month consolidation in interest rates. No matter what you hear about the interest rates, about the Fed, what they're going to do, about the conditions of the economy, whatever it is, it doesn't matter. Because interest rates have been going nowhere. They've been in a range of about 3.7% to 4.6%, as you could see, with this narrowing pattern right in here. The question is, what's going on? Because the stock market is rallying strongly, except for that trade war blip on the downside. And that came way down over here, as you could see, and left that big long-tailed doji that we have right over there. And this period in here, the bond market has basically been trading in the range. So the breakout is right around 4.53% here, the breakdown around 3.7%. And I have a hard time seeing it really getting out of this. The question is, we have this period of rising stocks, we have this period where they're not correlating well that could be understood. Is this an indication of slow with no stocks rising and no new high in interest rates? In other words, interest rates are not going. Is that an indication of slow growth? Is this an indication that it's extremely high valuation and you can't you wouldn't really expect that the stock market could make a lot of upside ground? It could make some based on this because the stock market just goes going up without the bond market supporting it based on it should be interest rates going up in this time frame, but they're really not. They're stuck. Is this an indication that AI is lifting all the indexes in here and it's very anomalous? Is it an indication of earnings concentration in here that puts the stock market at risk? I don't have a solution to this. I see a disparity going on. And I don't, everything that I put together says to me that either the bond market is going to have a huge rally and interest rates are going to pop in here to get in line, or the stock market's going to come down very hard and you're going to get a downside break here in interest rates. It's one or the other. I'm getting a sense that this is a monthly, remember, it doesn't have to change for a few months or more, but I'm getting a sense that there is going to be a change and they're going to get in line. In other words, stocks will take off, interest rates will explode, or the stock market will pull back, and it will be because of all of these problems of slower growth, higher valuation, earnings concentration. And when that happens, of course, as we know, interest rates come down very sharply in there. So it's a tough question for me. I really have not gotten, I don't have a good handle on it. All I could say to you is that it's really interesting. I understand how interest rates and the stock market work together, and I think they're going to get together again, but I don't have a great solution. And I think it's so interesting. I just wanted to show it to you, bring it to you and say, there's something big out there. Is it a big stock market move to the upside and interest rates following as they move up? Or will the stock market retreat in a big way and interest rates break down from this 18-month consolidation that they're in right now? That is what I'm going to show you on that. And I hope that you found that incredibly interesting as I did. And I kind of wait for your comments on that to see if you can figure out what that means, because it means something and it probably means something big. So that's a look at that very unusual chart. Now let's get into the stock market. We'll look at the S&P 500, NASDAQ, and Russell, multiple time frame analysis and projections. I'm going to take a little slower pace on this as I look at the S&P, and then we'll kind of blast through the NASDAQ and the Russell. The NASDAQ looks a lot like the S&P 500, and the Russell may just be a little bit weaker. So let's switch over now. I'm going to move that chart that I just put in there, right there. And now we're looking at the S&P 500. So on the left here is our market condition monitor. This is a level 3 or 4 application that we have. It's just fantastic. I'm going to use it to help identify and see the alignments in the analysis based on trade setup conditions. And let me just move this down a little bit more so you could see the Dow come up in there also, the Dow and Apple. There you go. So there is conditions. Now I can't get to this, to the mode. Darn. All right, let's stay here for a moment. So we're going to look first at the intermediate term, and this to come up. There you go. So the intermediate term, as you see on the trade setup conditions for the S&P 500 and the QQQ, the IWM, are bullish, and neutral. And having a little trouble just getting this in alignment. What is going on here? 1 second. There it is. Okay. So let's take a look here at the weekly chart of the S&P 500. And you can see the cyclical patterns in there and the harmonics as we look at them. This line over here is the old one when the shift came on the extreme move to the downside, which just barely made any significant change, but it was enough to get to confuse me a little bit on this bottom until this turned up and everything started to turn positive on the reversal scout. But now we clearly turned up way over here in April and had this big upside move. So when we look at that, we see that the intermediate condition is bullish, looking at the S&P 500 on the weekly chart. This is a representation of what you see over here, a bullish condition. And I have it pointing up to the old high over here because that makes the most sense to me up there. There are other targets that we can have in there based on this advance, but this gets you up to the old high. On the daily chart, I have a little different information, but you'll see that. So these supports that we have in here come off of the swing high, swing low from this high to this low, and then to this high, and there's your supports, and they are rising because this is still rising. It got through that 78.6% repair level, which is even a more bullish thing that to occur. Our original period of risk was April, May, June, but clearly it made an earlier bottom than that. Here is the daily pattern in here. Now we're looking at a very interesting condition. And that is, let's first take a look over here at the short term, which is the representation of the daily. And you see that these are very bullish. You've got conditions such as our option bias indicator says bias on the long side. We had an upside momentum change right in here to the positive side again, saying that we're likely to get another upside impulse, which you see we got right up over here. And we have the slim ribbon over here still positive, though the reversal scout, which is more sensitive, is just starting to turn over right over there. Now, I have this highlighted and I have some arrows in here. I want to talk about this. First of all, what's interesting is that you could see that this rally right over here didn't quite get up to there, and now it's turning down. That's very similar to what we saw here, a pullback, a rally into resistance, and then began to come down. Of course, this was the collapse that came on the trade war panic. I don't really expect that. What I expect is that this cycle right over here is entering into this little corrective period and comes down to support. Again, as I talked about gold early on, you have very bullish, you have on the intermediate, you have bullish conditions. On the short term, you have very bullish conditions. Does that give you a reason to be selling? Does this line coming down and these pointing to what is likely to happen with the completion of this cycle here say to go short? Not really. I mean, if you wanted to go short, it could be small, but overall, these are positive conditions that we see in here. And that would say, right now we're probably looking for what could be a pullback, but also looking at the highest probability trades may be on the long side after this is over with. This points to the first or second week of June for that correction. And in here on the weekly chart, there is no designation of anything in there because it's still pushing up. So that strong upward momentum on the weekly, the upward conditions on the daily, all are pointing to the upside, as you can see, with a little corrective period. Look at how small it was right in here. This over here is an unusual condition, but this setup is similar. In other words, the translation, in other words, where it made the peak is actually on the left side. The translation of where it made this peak is on the left side. It had a failing rally. This is having what looks like a failing rally. That says there's a little correction that's likely to come in here and then be moving up again. So if I look at the intraday and the near term, as we look right over here, you could see that this trade setups are neutral. In other words, they were bullish. You just got some downticks in here today, and they went to neutral. This still isn't negative. We still have a positive green here on the slim ribbon PO. This is still pointing up when you look at the slim ribbon, and you look at the reversal scout. So we haven't really had anything roll over here. So, if I'm looking for what's actionable in my mind, well, at this point, if I were, a trader, I would say that you probably have a condition where there's some justification for maybe a small short, but even with everything we're looking at here, it's probably more justification of even a bigger long side trade if I wanted to take a long side trade. What am I looking at here? Let's talk about everything that we're looking at here. And let me just get a little closer look, and you can see the cycle as it's forming and likely to have some pullback on here. So here on May 30th, the S&P conditions say cycle configuration is positive here on the daily chart. You can see that because there's no way there's a high probability that the cycle is going to complete anywhere but above where it started over here. The cycle translation is neutral. Why is that neutral? Well, because you had the high over here, and now you have, that is on the left side. And at the same time, it got pretty close to that over there. So I can't make a negative translation out of that. What is the cycle phase? Well, the cycle phases are rising, peaking, declining, and bottoming. That's, like other, analysts use different terminology for that: accumulation phase, topping phase, but we use rising, peaking, or cresting, corrective or declining, and then bottoming. So right now you can see we're in this peaking period right over there. What is the intermediate influence? Well, we know that the intermediate influence is positive when you look at that. The near-term influence, well, if I go to the near term right over here, it is neutral right now, but if I go to the intraday chart, these are still positive there. So I have a hard time making any case for this being anything other than still a positive influence, though maybe slightly positive now, or maybe just starting to give that up to neutral. The slim ribbon, positive when I look at that. The reversal scout, positive, just starting to roll over. The OBI on the bottom over here, positive. The MCI, which is here on the 2-hour chart, is neutral, moving into this neutral zone right over there. And the directional bias. Now, I want you to hear what this means to me. Looking at the sum of the evidence, it says to me that the directional bias is still, if I wanted to put in a long side trade, it's twice as many as I would do on the short side based on the sum of the evidence. I like to use, for me, like a 4-to-1. In other words, if everything aligned, if the weekly was pointing up, the daily was in a rising phase, everything was pointing bullish, the 2-hour is pointing up, then what's actionable to me is 4 times the size of what I would do on the long side than what I would do on the short side. That doesn't mean don't short when you think it's right for you to short. You just do it smaller. If you think it's right for you to be long, if the conditions are more bullish, then you do it bigger. This is how you get on the right side of the impulse in the market. Those of you that are subscribers to our day trader, you can see that we have an impulse monitor on there. It works for intraday traders, for day traders, to give you some sense of market conditions. That's what I'm doing right over here, is setting up in all of these conditions what would be monitoring for impulses. Right now, the monitor says to me, looking at this and extrapolating everything I see, that there could be a small impulse to the downside based on the cycle patterns. As generally, when we get into this bottoming period, we put these gray arrows in there. If it's, just in a period where everything is really pointing to the upside, and we look for some pullback possibility in here. So the impulse to me possibly would be very small risk to the downside. However, when we get past this period and into this next rising phase and all of these align positively, then the impulse is strongest to the upside. You have that right over here, where everything in here was set up. The weekly, the daily, the interdays, is everything turned right up over there. The highest probability of the impulse was going to be to the upside, and that's how that works. That's how you set up yourself to be catching those bigger moves using all of this information and looking and say, well, what's actionable to me? Where do I want to make my biggest exposure? Where would I make my smallest exposure? And that's really what you get out of this, using all of this information. So right now, some of the evidence to me on the S&P 500 is that, mostly the conditions are positive. Those with the greatest influence are positive. There's nothing on here in the daily that's turned negative, even though the arrows are pointing down, even though you're getting into the bottom of this pattern over here where you get into the corrective phase. It doesn't mean that there's a big decline coming. It could actually move sideways, as we see in some other cycles where, it moves sideways in this cycle right over here and then move to the upside again. And maybe it just tests this low, 57.72, right around that level. Maybe it gets over here, 58.12. Those are not very big declines, but you could see that everything is likely to set up on the long side again coming up in just a week or two when you look at that. So that's a look at some of the evidence analysis using all of our indicators, putting it all together, setting you up for getting a sense for where you want to take your risks, where it's the most sensible to take your risks, and when something actually is setting up that is actionable. Actionable, a very important word in here. What's actionable now? Maybe a tiny little short side trade. That's what I see in here as a possibility. Let's look at the NDX, and you'll see right there that basically I don't have to go through the analysis. It's the same, as you can see. There's really no change in here from what I just said in the S&P 500. The downside, a reasonable downside target here for a correction is around 20,800. It would take something pretty negative to come out to push the markets below those support levels that I just talked about. The Russell RUT, let's switch over here to the intermediate. The Russell is neutral on the intermediate right over there, so it's a bit weaker, and you can see it didn't get anywhere near up as high on that weekly chart. Here's your daily chart right over here. Again, that lines up very well with the other indexes, and reasonable to see 2012 down to about 2003. Somewhere in there is a pretty reasonable target. Again, this lines up into the first or second week of June, and that's the short term right over there, as you could see, is just slightly bullish there. And the near term right over there, which is looking at this chart right here, and we'll just blow that up, you could see is just, it's neutral right over here, it's neutral right over here, and it's just starting to turn down, as you could see there. So this one is likely to go into a slightly bearish mode pretty soon. Pretty much lines up with everything that I just said. Earlier in the show, somebody asked for the VIX, so I'm going to put that up right now. Here's your VIX weekly pattern. We were looking for a bottoming period right over here in the VIX. That's really looks like it came a little bit early. Then you can see what we're looking at is a slightly earlier trough in the market somewhere over there. You can see the big upside move that we got right there, but there's not a lot of fear in this market, as you can see, and based on everything else we're looking at, it makes sense that there wouldn't be a lot of fear. I'll just blow that up a little bit. Here you can see that bottom very clearly formed and then moving up. Remember, we said that the indexes look like they're going to pull back, for a week or so, and you'll probably get a pop in the VIX over here, but I don't think that'll last, and then this will begin to give ground again as the indexes start to move up. So that's a look at the VIX, which is, doesn't really look like it's going to make any big upside moves right now. That would come at a time period where we see a failure in the patterns on the indexes. Of course, we don't see that at all right now. If anything, we see its strength in the indexes and a likely pullback. That is it. That's everything that I have to say in here. I want to remind you that we have a special on level 4. You're going to get everything that I just showed you in level 4. $99 non-recurring. That's 37% off. And Matt is going to do a whole webinar on that coming up in the coming week. So if you want to join in on that, write to team@askSlim.com or to Matt@askSlim.com, and he'll invite you to that, and you'll be able to learn so much about how to use the indicators, how to use the style of analysis that we do. And hopefully you just loved what I just showed you, because it's just, great to learn that, put it all together, and put your risk rewards on the favorable side. So everybody, anything that you have to say about what we just did?
Woo, that was a real good deep dive, Slim. Multiple
Yeah,
time frame analysis
Sure
showing
was. Yep.
the methodology in action, and then converting that information into some trade planning stages and process. So that's what you got to do. And that's what we're
yeah,
here to help with.
great.
Well, and I
Great
like that
job,
you
Slim.
address some misconceptions about what
Yes.
those down arrows into the trough mean. It just suggests that we're going to form a trough or should be forming a trough in those areas. Doesn't mean to go short.
Yeah, absolutely. And so, we get a lot of emails and a lot of people misunderstanding how to use that information. That's why we encourage you to become a member and to really learn this and really get a good understanding of it. So great work, everybody. And I will be off next week. The team is going to be putting together some great stuff while I'm away. And I'm really want you to have a very successful time period while I'm taking a bit of a rest. Everybody, thanks for all the hard work, and we'll see you next time.
All right.
Have a great weekend.
Okay, bye bye.